So I'll go ahead and do the intro, okay?
Perfect.
Thank you so much for coming to our Native Investment Division webinar. I'm really excited to have Kunal Gupta with us today. He's the founder of Gold Path Investment Group here in San Diego, California, and a CFA, which is a charter financial analyst. And he's here with over a decade of experience in corporate finance and wealth management. And Kunal has served as a CFO for many advisory firms, helping them grow, improve profitability, and navigate long-term financial strategy. And what I really appreciate about Kunal is that he works with high-earning professionals, business owners, and individuals who are navigating major financial decisions. And we feel that the topic today will be very relevant to you. We've been running into a lot of people who could use the information that Kunal has to share with us today. So, Kunal, I'd love for you to walk through what you're seeing right now when it comes to wealth transfer and inherited assets. Thank you for being here.
Perfect. Thank you very much, Jessica. Truly a pleasure to be here and very excited to, hopefully share some useful knowledge to many people and hopefully they can benefit from it. So, yeah, without further ado, let's get and get s- just a moment. We'll get started. Hopefully you can see it. Perfect.
Right. Great.
So yeah, thank you for the intro. Just to, a little further elaborate on what Jessica said. Yeah, so, I'm have many years of experience. I worked a lot in corporate finance, financial planning, wealth management. I worked a lot with many CFO or with many advisors who have their own advisory firms, trying to help them grow their customer base and business, also trying to help them become more efficient and also better in what they do. So, a few years ago in 2023, I founded Gold Path Investment Group. The main reason of starting it was because, there are a lot of people out there who I feel don't have proper guidance and maybe, who unfortunately don't have, who maybe didn't plan as well as they could have, looking back. So, hopefully I was hoping through this firm I would be able to help many individuals, better realize their long-term financial goals through long-term planning and sound investment strategies. Um, yeah, so I have I'm a chartered financial analyst. In addition, also earned an MBA from WashU in St. Louis and a bachelor's in economics. Currently live in San Diego. I reside with my wife and kid. Really enjoy this area. I love to, do many things in the area, travel, hike, play tennis, just kind of explore new places in Southern California. So, yeah, so let's get started on a little bit more about the whole wealth transfer trends and everything we're seeing now. So, but first, before we get to that, let me just tell you a little bit more about, what my firm does. So, we're involved in financial planning and wealth management. Within financial planning, we help individuals, even small business owners, do a lot of retirement planning, whether that's managing portfolio, or kind of like providing planning strategies to help them, retire the way that they would like to in however many years they plan to retire in. Also help them save for their children's college education, which has only become more and more expensive. Estate planning is also a big thing. Many people plan to pass on money to their beneficiaries who have received it. So we help them manage that money. Um, Cash flow planning, trying to help you manage your kind of day-to-day, budgeting, cash flow planning, spending, and then tax planning, trying to help also try to best reduce your taxes in a way, to really give you the best value today. In terms of wealth management, that goes hand in hand with financial planning. That's more along the lines of kind of managing money through many different investment strategies, whether it's investing in whatever is kind of best suited for your needs. We are fiduciaries, so try to manage risk appropriately as well as try to have the best balance of assets to help you realize the return you need to reach your financial goals. Um, so now let's talk a little bit about some trends in wealth transfer. So there are many trends, that are kind of starting right now that I think are going to benefit many of the younger generations today. So, one trend that's pretty fascinating is that, baby boomers, we have, that was a huge increase in the overall population, many people born that time. And then, they're now roughly all pretty much in retirement age. And, they have collected a very large amount of money, through these years. And then, we estimate somewhere around 70 to 80 trillion dollars that they have, that they're going to pass down to whether it's spouses, kids, other beneficiaries, over the coming years. And this is roughly over three times what the US, produces in goods and services in a year. So this is a very large amount, a lot of money being passed down. These assets would include anything from, cash, stocks, commodities, maybe it's, gold, other assets, real estate. So with the 70, 80 trillion, we do expect maybe a fourth of it or so to go to charities. But, that still leaves a large amount of money left to, descendants, spouses, sons, kids. And, with this wealth, this is going to be very useful and, and very just essential to help a lot of these, whether it's millennials, Gen Zs, even Generation Alpha, buy homes, pay down a lot of debt, whether it's student loan debt, existing mortgage debt, and really going to be useful for them to further build their long-term financial security. Um, but I think, the main question I think I want everyone to think about, as they kind of hear it, as they kind of attend this webinar and kind of think about it is, how can they use this inherited wealth to best manage, their current situation, their long-term goals? So, as we think about that, um, let's move on and talk about, some common mistakes people make when inheriting their money, which I think, it's kind of easy a little bit to kind of to kind of look at it, but, once people inherit money, it's very easy for your mindset and everything to change dramatically. So, there are many mistakes that I've personally have seen. One thing is that, after certain people receive a large amount of money, they tend to be very happy. Of course, they're in a very different financial state. Some of them may, just kind of rush to quit their job because they feel like, that they have a great sum of money that, maybe it doesn't make immediate sense to start working, or maybe even some of them even, use it to pay down their debt, right? Which can be useful in some cases, but, in general, I think a lot of debt, whether it's, mortgage debt or even student loan debt, the interest rates on them can be generally much less than what you could, realize through sound investing. So that's always something to quit. And then, also with the quitting a job, if people who are generally younger in their 30s and 40s, that's usually a peak career area. That's kind of the age, where you're kind of really building your own, um, your human capital is strongly growing. You're kind of reaching the age where you're kind of reaching your peak earning out income. So it's definitely not a time when, even if you inherited a lot of money, that maybe it's probably best not to rush and quit your job, right? And then another common mistake is tax implications. There's taxes are a very important consideration. Whether it's I've seen people kind of withdraw money early, whether it's to a retirement account. Also, people, maybe after inheriting it, not doing what they need to try to reduce their taxes in their current year or even in the future. Always something very important to think about. Um, in addition, emotional spending. So, sometimes when people inherit money, usually they do it after, the death of a loved one. So, that can bring out a lot of emotions and maybe cause a lot of spending. Whether it's through wants, desires, or just through just kind of splurging, right? So that kind of happens a lot too. Even though they may have a lot of money and that they may not be in immediate danger doing it, they generally can really reduce or really lower their long-term financial income and growth potential. To go along with that, spending too much without saving, you know, whenever you inherit money, I always think you know, it's always good to develop a plan. And, you know, usually I think it's very easy and very quick to people to start rushing and kind of buying things that they immediately want rather than trying to weigh the pros and cons of, buying now or kind of waiting to buy it later or kind of saving first. So these are all kind of different, great things to think about. And then, one thing we always recommend for a large majority of people is to get expert advice, just because, even though many people think, they may have a good idea of, they may be pretty sound financially, they have a good idea of where they stand. I think, with expert advice, I think most people are going to learn some things that maybe they didn't know before, and the expert advice can, I mean, only serves to further help them, whether it's, take advantage of certain situations or, even plan better in the future.
That's great.
So those are some, those are common mistakes I've personally seen when inheriting money. Of course, there are many others, but I just kind of went through some of the more common ones. Um, In addition, risk of not planning before making decisions. So this doesn't have to do only with inheriting money. This would have to do with in general, just in general, not planning before making any type of decisions, whether you're young, younger, older, whether you inherited money or you didn't. Um, some of the biggest risks are, sudden financial hardship. In general, planning goes a very long time. No matter how old you are, there's going to be many, many years that you need to plan for. And, making certain, whether it's certain big purchases, whether it's, you know, homes that are too expensive, whether it's, luxury goods or cars, many people do this. And, while it doesn't impact them immediately, some years down the road, they realize, financial hardship and they're not able to pay it off or, and they end up in a big financial dilemma there. Also, financial growth opportunities, one of the biggest things is that, in order to take advantage, in order to maximize your long-term savings, your retirement growth, you really have to be aware, there are many opportunities out there, financial growth. You have to carefully consider them. And then, you know, I think it's best to work with an expert to really try to do, uh, just to try to, develop a plan that's kind of best tailored to you and your goals and kind of your own attributes. Um, also not planning, very common. There's going to be a lot of emotional distress and just, stress and distress just because people, if you don't plan, you're not really aware of, you know, you kind of, it gives you a lot less confidence and a lot less, I would say, trust, in yourself and how things are going to go in the long term. Many people who inherit a lot of money, they don't know if, how long it's going to last, whether, how long they need to work or what they should do to, to really plan for their future and not overspend in the beginning, just to try to manage their spending so that it can last their full lifetime. And then not doing that definitely creates a lot of stress and duress, for people down the road, whether it's, 5 years down the road, 15 years down the road. Very, very common and it happens frequently. To go along with that, overspending. So generally overspending, people who do overspend on, whether it's, certain luxury items, whether it's, homes, to live a lavish lifestyle. Many people who do overspend find that if they hadn't, that they could have maybe enjoyed, you know, really just kind of enjoyed a much easier and much more financially fulfilling retirement. So that's very, very common. I think it's, I mean, this kind of goes along with everyone. I think it's very easy to overspend and it's very easy to do that, especially if you don't plan.
Mhm.
And so a fifth one that I think is also common that I think many people don't necessarily think about is the work burnout situation. So this has to do with people who maybe take on a new job, whether it's they're attracted to additional pay, but there usually comes with a lot of caveats, whether it's having to, travel a lot for this job, whether it's having to work many, many more hours. And, a lot of times this kind of really plays a toll, takes a toll on their personal lives, whether it's spending time with their wife or kids or both. I think many people realize that maybe the increase in income just doesn't compensate for the whole burnout process, the additional hours they spend, the less time they have with their families. So always something very crucial to consider when, taking on a new job or in kind of staying in a current job. Always very, very important to weigh. Um, so yeah, so those are some very big important risks or very huge things, huge concerns that happen when people don't plan before they make decisions. Um, So let's go on. So, one thing I wanted to go over is kind of wanted to share of an example of a client who I've dealt with. Of course, his name has been changed to preserve confidentiality, but it's a situation that he had, that he kind of wanted expert guidance on, and one that we kind of helped him, navigate through. So, let's take a situation of David. He's a 40-year-old millennial dad. He had his father passed away several years ago. Unfortunately, his mom just passed away very recently. He was the only child, so, he ended up receiving a pretty decent inheritance. He received, one thing he did receive was a primary residence, that he inherited fully. He inherited a home roughly $900,000 located in San Diego. His parents bought it roughly 35 years ago. It was completely paid off. Um, David, his wife, and his daughter, they currently live in Phoenix in a condo valued at roughly $425,000. They have paid off roughly 100,000 of their loan, $325,000 left. They have roughly $2,300 a month that they pay in their mortgage and, about 25 years left of their loan. And, after inheriting a home, there's a few different options. He didn't know which to choose. So this was something that we helped him with. So let's take a look at the options. So, one option was that he inherited a home, he was thinking about was maybe selling his condo and moving into his parents' home. Definitely something worth considering his, parents' home is worth more, would also give more space. Um, Another option he was considering was, maybe keeping his condo, living in there, and then keeping his parents' home as a separate vacation home, which also seemed to make a lot of sense in this situation. Um, And then option three, maybe selling the home that he inherited and kind of using the money he gets from the home to pay off his condo completely, which also seems to have a lot of benefits too. But, in terms of what to do, what was ideal, this always depends on every person's personal situation and their wants and needs. So, we're going to kind of go over some of the pros and cons of each and then, what seemed to be the best fit for David. So, option one, selling his condo, moving into his parents' home. There seemed to be a lot of immediate pros with that. One is that, he can essentially selling his condo, he realized some appreciation. He's able to kind of use the gains he gets from the sale. He can kind of use it for additional savings, whether it's putting it into like a Roth IRA or, whether it's saving up for his children's education in the future. That was one, thing he could potentially do. Another thing was, moving into his parents' home. It has more space for his family, whereas his condo isn't small, but I definitely he felt that he could, maybe be better off in a bigger area. And also selling his condo would one of the great things was that his housing costs would lower dramatically since the only thing he would really have to pay would be the insurance and the property taxes on his parents' home. So these are all very compelling, pros. There were some cons though, if he did go this route. One was that one of the main ones is moving. Moving as anyone has moved, whether it's across the states, is very costly. It takes a lot of time. It can be very disruptive to your work life as well as your children's school life. And also doing this, it would, he currently had the hybrid work in Phoenix. So doing this, he would have to have approval to be a remote employee. And then he would have to, find a new school for his child. And then there'd be like a whole adjustment for this, further daughter to get used to that. So those would kind of be a bit disruptive. So there's some good pros, but there are also some cons with this. So, let's look at, the other second option he was considering. One was that kind of not really making many changes. This would be kind of staying in your condo and just keeping the home as a vacation home. Some pros, the biggest pro would be you wouldn't have to go, wouldn't have to do that, disruptive interstate move.
Mhm.
Um, and also, he does have David, he had a lot of personal ties to San Diego, having grew up there. And then he also travels there each year. And so by keeping his vacation home, he'd have a place to stay, through you know, his vacations and his trips to San Diego, which was, very useful to him and very valuable. Of course, there are some cons with this route as well. One is that you know, in addition to keeping his existing housing costs in his condo, because he inherited a parent's home, he now has to pay the property taxes and insurance on his parent's home. So there is this sort of, there are these additional costs that he faces because he has this new home. They're not substantial, but they do factor into his monthly budget. And one is that also this home it is an expensive asset. It's also underutilized, and by keeping it as a vacation home, he's not generating any income from it or any type of appreciation. So those are also, those are, definite kind of, pros and cons that he was strongly, that I kind of informed of him that, that he did consider, that he was considering very heavily. The good thing is that it would be require the least amount of effort and disruption in his life.
Mhm.
And so let's go to the third option he was considering, um, would be selling his parents' home, paying off his condo completely. Some of the immediate benefits are that, if he sold the home, there's going to be very limited capital gains tax he's going to realize because, after inheriting it, the new market value is going to be the current value the home was at when he inherited it. So if he sold it now, the increase would be very minimal, just because there'd be very little time that passed. Um, Also, selling his condo completely, I mean, selling his parents' home, paying off his condo, this would really dramatically reduce his monthly payment. You're looking at roughly $1,900 a month decline because he'd only have to pay the property taxes and homeowners insurance on it and not any mortgage interest on it, as well as principal. Um, in addition, a lot of the proceeds he used, they can be used for not only paying off his condo, but whether it's reducing, current debt, um, any other debt, whether it's credit card debt, any other debt he has, using it to save for retirement, children's education, as well as any type of future purchases, whether he wanted to purchase a new car, maybe purchase furniture or just anything he wanted to purchase, he'd have the funds to do that. Um, but although, there are many financial benefits, there are some, there are some negatives that are a bit more emotional and also would play a role in his, overall quality of life. And one is that, if he did do that, whenever he visits San Diego, he wouldn't have a home to stay in. He likes to travel to San Diego, explore the area, he loves the area, and then he'd have a home to stay in when also visiting family. So that would be a huge I mean, a huge con from doing, from going this route. And then, also selling his home, there's a lot of sentimental value in his home, having grown up there, lived there a lot. Just kind of have that, all those experiences, personal experiences he had there. By selling it, he kind of felt like they'd be kind of going away.
Mhm.
So, while there would be, a good financial impact immediately, there'd be some negatives in his overall quality of life in terms of in terms of his overall happiness and his, overall just terms of traveling and kind of enjoying his own, trips to San Diego. So, so those were the three scenarios. So, as he was kind of weighing these different options, these were some of his priorities that kind of determined, what decision to make. One was that, he really wanted to have a home when visiting family in San Diego. It was very important to him. He really wanted to avoid relocating at this time. His daughter enjoyed his school. His daughter did not want to change schools. And, also, he had a great job. He loved the current hybrid setup and, he didn't want to have to, change to remote and he didn't want to have to maybe, try to look for a new employer or, or really just cause any concerns in his current employment. So, because these were his priorities, the best options seem to be much more clear now. And, what we decided to do was he chose option two, which although financially immediately it may not have the greatest, benefits at the time immediately, it is best aligned with his priorities and it did, while he did have to pay the additional property taxes and insurance costs because he inherited that home, he overall, they were living, pretty comfortably in their condo. Their overall costs were very well aligned with their income. So, he was able to kind of shoulder these additional costs. And, most importantly, he was able to kind of, have this home, kind of keep it. He really loved his parents' home and, a place to really stay in a city that he visits frequently. So it all kind of depends, the best option all kind of depends on the person. And, for him, this was clearly the best option. And so, yeah, so we went with option two. In general, we think, having worked with them, I think this kind of seemed to work out very, very well for him. And it really seemed to be the best overall benefit to him and personally and in terms of, even financially, he still is doing very well. So that's why we went with this option. Um, Going forward. So I hope you guys kind of enjoyed learning more about, David's situation, learning more about our firm, what we can do. We work with many individuals, business owners, not just on, trying to manage, inheritances, but in terms of any type of financial planning, wealth management. We work with many individuals and, we really our goal is to really help people, meet their long-term financial goals. So my contact information is here. Feel free, always, you can feel free to email me directly if you have any questions, any type of questions or concerns, or, this is my direct phone number. Also, strongly encourage you to visit our website to learn more about our firm, www.goldpathinvestmentgroup.com. And, and so anytime there are any questions, feel free to reach out to me. Would be happy to kind of go over, whether it's just a question you have in your current situation, whether you want help in financial planning or wealth management. We're kind of open to helping out everyone, with whatever they need help with. Um, but yeah, so again, thank you very much, Jessica. It was a pleasure. I hope everyone, who's able to see this is able to find some value in it to really help them guide their long-term financial planning. And then, yeah, we wish everyone the best. And yeah, feel free to reach out to us if you ever have any questions.
Thank you so much, Kunal. And before we wrap up today, I just wanted to thank everyone also for spending time with us. And we know that many of you are going through major financial and life decisions. And our goal was just to bring some clarity to someone who's a resource and to see some scenarios and to really think through what your priorities are financially. And I think when you are really clear about your financial priorities and then you partner up with someone like Kunal that is how you'll have financial success when you're planning ahead. And so I think that's one of the biggest takeaways is that some of these decisions should not be made in isolation, and you have resources and um, definitely the financial strategy and real estate strategy work hand in hand together. So if anything Kunal discussed today resonated with you, please do reach out to him. We are offering both of us complimentary strategy sessions. We'd love to help you. And again, thank you for attending. Have a wonderful day.
Thank you.
Thanks, Kunal.
Thank you, Jessica. Take care, everyone.
You too.